62%, that's not that big. Hey everyone, sorry for being late. Thanks for waiting. I have no excuse this time.
Yeah, logistic difficulties. Anyways, I'm just going to quickly introduce you. Then we're just going to skip right to it and just do a Q&A. So, started at MIT, majoring in electrical engineering, computer science, and math. Equity derivatives analyst at Goldman Sachs. Palantir as well. AI stuff. Macro trader at Citadel. And then went on to found Kalshi. Pretty good, pretty good. This is him. Feel free to have me back as well. So that's the intro. The co-founder, Launa, couldn't be here today, but we have Tarek. So everyone give him another round of applause. Thanks so much for coming. Sweet. Yeah, who wants to ask the first question? Or do you want to say anything to the crowd first?
I think let's just do questions.
Sweet. Questions?
We'll just spit off.
Hi, nice to meet you. I'll get right into it though.
Just say your name and what you're studying. And
I'm Lily, a sophomore studying econ math with a CS minor. And I'm curious because everyone saw Kalshi's sort of advertisements during the election. It was like a really big thing. And it was a big advertising push. But I'd love to hear from your end, what is the goal in your advertising? What is the strategy there? Do you think it's been successful? Are you pivoting? What does that look like on your end?
Well, we advertise so that we get users so that we can make money. I think, maybe let me just break down this question. So there's like, what are we advertising for and what was sort of the strategy on the election? And maybe I'll segue into sort of what is strategy post-election. And I'll talk a little bit about the background and, it'll be a little bit of a convoluted answer to the question. But so we started the company with a simple premise, and it was just like, we have a financial market for equities, like buying stocks. We have a financial market for commodities, like buying oil and gas and metals. We have one for credit, like risk in companies. We have one for currencies. And recently we have one for this sort of like digital type assets, like crypto and so on. The thing that sort of irked me when I was going to MIT, so I went through MIT. I was not going to be an entrepreneur, so that was totally not what I thought I was going to do. I really wanted to be a trader. I love trading. When I was at Goldman, it was in 2016, so it's a while back now. One thing we kind of observed is that what people really cared about is they just like having opinions about the future. And in 2016, actually, most of and those are like fancy institutions like hedge funds and family offices and so on. They were like, hey, you want to bet on Brexit or hedge against Brexit? And then we would offer them, some of you have seen my talk, I talk about this a lot, a bundle of stocks or options or some traditional assets. But there were three problems. One, it wasn't exactly what they were looking for. We were pretty good at selling it to them, but it was a proxy of what they were looking for. Number two, it was like opaque. We would just give them any price and they would pay for it. And it was nice for us because that's how we pay ourselves bonuses, but for them it was bad. And then three, it's not accessible. Like, most of you, I'm guessing, have never gone to the Goldman Sachs investment bank as a structured product. And so the premise is like, well, how about, it seems like what people really care about is like making predictions about the future. How about we build a financial market to enable that? Some people more recently now like to call them prediction markets, but really the core premise is like we're building a financial market where the underlying, the thing that you're trading on or you're buying, is a piece of the future. Is a prediction, a forecast that you have about the future. And we got really excited about that idea because, if you build that, this may actually be one of the largest financial markets because it's the broadest. Like, you can capture the most amount of things because there's all sorts of questions about the future that you can answer. And two, it also could be one of the most useful ones because predicting the future is pretty cool. Like, it's pretty important. So then we came across the first challenge of the company, which is, that was illegal. So, we realized, okay, well, what we want to offer in the US is just not allowed, and we were pretty young and naive, which was actually a good thing. Like, if we were dumb enough to actually believe we could actually legalize this thing, and we did. So we spent 3 years legalizing it and so on. Then we had a bunch of issues with the prior administration, the government, where they let us do all these different things, but they didn't let us do the election. We were dumb enough to think that suing the government was a good idea. that worked as well. Mix of luck and a bunch of, and we can, if people have questions about that, we can talk about that. And then we won. And so when we won, we had like 2.5 weeks or so till the election. And we realized, okay, well, this is going to happen once every 4 years. One. And two, it's probably this has been illegal in the US for 100 years. So it's the first time it's legal ever. We have a unique opportunity with a very narrow window where we're the only legal place in the US where we can do this. We just have to go all out. And so we had this kind of very intense, hardcore marketing strategy for like 2.5 weeks, where we're like, the goal was like, how do you make Kalshi a household name? Like, how do we figure out a way for people to just know this company and know about it, and think about it, and talk about it, and understand what we're offering. We didn't have any fancy sort of structure. It's interesting because most places where they market, they like measure a bunch of stuff and all of that. And actually, it was just like a team of young people that sat down in a room and just started like thinking about a bunch of like crazy, cool ideas, and then working on stuff 24/7 to basically execute on them. So I think one of the big major hits was like the billboards, were basically like live streamed all across America, like live trades of people on like Trump versus Harris, and those kind of really went viral. And we had like a bunch of other kind of layers to the strategy. A lot of strategies are also like catered around like getting Elon and Trump to actually like keep talking about the odds and making them central to the conversation, which also worked effectively. And we acquired just like a shit ton of users, had a lot of brands. So on the day of the election, we don't know exactly still because a bunch of our systems broke, and Netlify, which is the renderer of our website, I don't know if any of you have heard of this, also broke, but we had somewhere around 400 to 600 million unique site visits. So it's actually a meaningful chunk of the world population actually using anything. And so we exploded around the election, and then after that, the whole kind of challenge is like, can we sort of continue the momentum post-election? Things have been going pretty well post-election. So our volumes are actually where they were in October, not in November. November was too crazy. Now we're entering sports, which is like another really big avenue for growth for the company. And we're partnering with some of the major brokers. So soon, if you guys use Robinhood, Schwab, Fidelity, and others, you're going to see our products listed in those places as well. But yeah, it sort of answers your question, but hopefully that was helpful.
Thank you so much.
Who wants to ask the next question?
So hi, thank you for coming. My name is Fauzi. I'm a sophomore at Columbia, and I wanted to ask you, like, where do you see the future of like regulated prediction markets in like the US and in the world?
What do you study?
Industrial engineering.
So where do you see the future? So it's interesting because when we started, maybe let me make it a little bit relevant. So I talked about regulation in college, most people get very bored. But like, maybe the interesting takeaway about this is like, the law is actually one of the hardest problems you could take on as a person, because it's actually generally seen as something that's really hard to change. You need to get a lot of people to rally behind your thing to kind of move it. And I think the interesting, I would say the most unique thing about the story of the company is that for a startup, we've managed to actually bend the law pretty consistently multiple times to basically figure out a way for us to exist. And in some ways, like, the way I'm answering the question is actually like, the answer is actually pretty dependent on us in some ways. Like, I think if we didn't exist, I think these things would just still be illegal, and it wouldn't be possible to do them. And over the last 4 years, we've kind of legalized and paved for a lot of paved the way for these things to exist, and we've had to fight a lot of fights, and it's pretty brutal and a bunch of things. I think we're in a pretty good spot now. So as a company, I think we've garnered a lot of influence in DC. We are relatively closer to this administration, and it seems that this administration is actually pretty open to kind of new things in terms of financial services. We've won the lawsuit, which has actually set a legal precedent for the fact that we're right about a lot of different things, and the government was wrong, and that gave us a lot of power to be able to enact more change. So I think the way that this goes is that this is just going to look like regulated financial, like stocks, basically, regulated stocks, regulated traditional assets. So I think in the next 4 years, that's what it's going to look like. And we're going to be working with the government to basically enact the right set of policies and laws and so on to get them right. It's a good question.
Thank you for your time. My name is Tina. I'm currently studying computer science and econ now. My question is somehow kind of on a similar vein, which is obviously it's not good to break the law. So, but I wanted to ask why Kalshi decided to go with the route of, like legally regulated prediction markets, as opposed to something like poly market, which is
So I think you should it depends on the type of company. I think that's at least our view. A lot of people don't know this. Actually, the first 2 weeks of the company were actually on the blockchain. We started as sort of unregulated, let's try things out, etc. But I think the thing that I developed pretty strong conviction over early on is that this is a different business from Uber and Airbnb and some of the kind of move fast and break things Silicon Valley companies. Like I think in a lot of these businesses, so like when you look at Uber and Airbnb, I think the right choice was actually just start unregulated and figure out how to work with the government to regulate it. And the main difference is actually they were in the light gray. And so like people think about breaking the laws as sort of like binary, 0 or 1, like I broke the law or something. But actually in a lot of these types of things, the law is either not fully baked yet, it's kind of unclear, it's not even there yet. Like a lot of crypto stuff showed up and then the government was like, well, we don't even know what to do about this. People talk about this thing of regulatory clarity, right? Which is a fancy word for like, we don't really have laws for this yet. And so I think in the case of Uber and Airbnb, there weren't really clear laws, and the laws were state by state, and like there was kind of very complicated landscape. And for them, like the worst case scenario is like, well, a mayor kind of comes and knocks at their door and says like, hey, I don't like what you're doing, let's figure out how to fit into something I like. The thing I discovered with financial services is actually 2 things. One, like theoretical, which is like, when things go wrong, they go really wrong. Like you're losing people's money and like people are very unhappy and you can make a lot of mistakes. So that's why regulation is so stringent. And 2 is like, I haven't really seen an example of a company that have managed to actually handle people's money and build like something really financial in nature, where you move money, you handle money, you custody money, you do money stuff for people that has actually gone to scale and succeeded without regulation. And all the prior 10 prediction markets have done a good job at actually like gaining interest, but consistently they had issues with regulators. And so for us, we're like, okay, well, we don't want to have a curse of scale. We don't want to get to a certain scale and then, start having issues. We want to actually become better as a business as we get more scale, not worse. And so for us, we're going to address the elephant in the room up front and get regulated up front. And so it was a much harder path. It was an I would say like unsexy path. It was the one that like people, it was hard. We were 3 years, we didn't launch any product, we're just like fighting with the government and so on. But it's paying off big time now. Like I think, now it's dividing in a very, very neat way. And we'll see how the 2 strategies pan out. But like, we have pretty strong conviction that financial services like need to be done in regulated format, essentially.
Thank you. This industry changing.
Hi, I'm a master's student in financial engineering. Last year we saw that you onboarded SIG as your like institutional market maker.
Yeah.
How has that been going, as that has impacted markets on Kalshi, and are you also looking to like onboard more and more market makers to provide more liquidity?
Yeah, so SIG is public. There's a bunch of others, like some of the names that you used to that are private, like they're on the exchange provided. I mean, like it helps. Like I think exchanges, like the whole point is like when you go on a financial market, you want to have enough liquidity. You want to be able to take any size you want, and it's generally harder to do without market makers. Like market makers are very good at pricing things, and they also have very large balance sheets. We have a market maker. We have a separate entity called Kalshi Trading that also market makes an exchange, but they don't have the balance sheet that a SIG has. Like a SIG can take up to $1 billion in trades at a time. They just have a massive balance sheet. So that's anything. We can't do that yet. And so that's where they really help. So they have balance sheet and they have like just 40 years of expertise doing things. And having more and more market makers helps prices become more competitive because multiple people do it. So SIG has been very helpful with that. We have a bunch of others, all the kind of typical names are on board. But the most actually interesting part is, and this is still kind of like surprising for a lot of people, 70% of our liquidity is actually just people. It's actually just non-institutional, like it's just random, like dudes, like and this is what's amazing. Like this is the part of the sort of mission that excites me the most. Is like you have this whole category of people that like actually know a lot about a bunch of different things about the world. Like and by the way, it's not like some of them are 40 and 50, but some of them are really young, straight out of college, and they've kind of traded a bit, made a few $1 million, and like are basically using that to market make. And they're very effective. Like it's a full-time job. They make 7 figures on Kalshi, and it's cool to see them, getting rich out of just like, doing this. But it's cool because they don't actually trade in traditional financial markets. They don't feel like this is like a house for them, but they feel like Kalshi is a home for them because they might know about politics, and they read a lot of politics, and they're interested in understanding things. They might know about climate or weather, economics, culture, now sports. And so these are things that they relate to, they're excited about, and they're actually excited about learning about them, not just to make money, but for the sake of learning about these things. And those people are a very important part of the liquidity that we have now. And they're often actually more successful than, say, our own market maker, or even like some of the, J Streets and Jumps of the world at pricing some of these things, which is pretty awesome to see. Yeah. We hire a bunch of them now too. We hire the top people if they come to us. Sometimes they're making too much money. You guys can scream if you don't want to wait for the mic.
I was wondering, why does SIG want to partner with you? What's like the value?
To make money.
But what's the value proposition you give them?
Money.
Okay.
No, I primary to make money. The second thing is, so Jeff Yass, the founder of SIG, has an amazing story. How many people in the room know about Jeff Yass? Okay, that's actually more than I thought. So Jeff started in horse tracks. That's how he started his career. He was like betting on the horse tracks, and then he realized like I can take that and take it to the options market. Made a lot of money there, and then he seeded TikTok. And so very few people know this. It was actually the most successful venture capital check in the last 20, 30 years, since I think Apple basically. And I think he put something like $1 million in the company and turned it to 25 billion. And his last act, Jeff, he believes that prediction markets are his mission from God. Like he really wants to be involved in the company because of a lot of the things that we kind of usually talk about, which is like this idea that if you do actually create an efficient market that prices like forecasts a lot of what's going to happen in the future, that could actually enable better decision making about our future, but also better risk transfer. You can manage risk with respect to geopolitics, economics, weather, COVID, catastrophes, and so on, much more effectively than we're doing right now. And he really believes in that vision. So I think that was a really kind of good match as I would say our first one, like public market maker, and that's been very helpful. Yeah.
So. Wait, sorry to interrupt. Actually, could you pass the mic to him? Because for the sake of the recording, we need everyone to be heard. Thank you so much.
Hey, how you doing? So before the Super Bowl, I think Robinhood put out a product that you could trade on the outcome of the Super Bowl, right? And then it got taken down. So my question for you is, what is the difference between like a financial product and a betting product, right? On one hand, a lot of your products, you could see people actually having financial risk too, and so they kind of use it as a hedging thing, right? But it's hard to think that someone would have financial risk to something like the Super Bowl. So you're talking that you're going to integrate this on your platform. How are you going to do that? And are you going to consider it like a bet, or is it going to be like a financial product? How are you thinking about that?
Yeah, so it seems like there's two questions. Like, what's the difference between like gambling and financial markets, and then what happened with Robinhood? So yeah, Robinhood was the first broker to launch on Kalshi. And so Kalshi is, let's say, like two businesses. We have Kalshi Direct, which is you go to Kalshi.com and you trade on our exchange. But the core business of Kalshi is actually the exchange and the clearinghouse. So it's a bit like New York Stock Exchange or CME. So we're like a thing that lists markets, and the market is basically like, a ticker, like WTI. It could be Brexit, it could be Super Bowl, it could be elections, and that's something that we provide liquidity for, and then we let people basically buy and sell. Kalshi Direct is like, think of it as the Kalshi brokerage part. So we have an app and website that can go and trade on Kalshi too. The other part is the broker side, which is actually the more traditional way that exchanges cater to people. Like you guys don't go to NewYorkStockExchange.com to buy a share of Apple or Tesla, right? You go to Robinhood and Schwab, and over time it's going to be the same thing. You can go to Kalshi if you want, or you can go to Robinhood or Schwab or others to buy like a share of an event, a prediction market. Yeah, so Robinhood was the first one. They decided to launch Super Bowl. I thought it was like too aggressive to launch the Super Bowl first. And the regulators just wanted them to start with something else, basically. They wanted them to start with something else. Sports, because sports is contentious. There's like now, we talk about that too, but like, we have a whole kind of battle with the states, and should this be at the federal level versus state by state and so on, and we figured that. I think the difference between like gambling and financial market is very simple. Like, a financial market is a financial market if it has utility, like if it has use outside of the activity of betting or speculating in the financial markets. And so the easiest way to draw the line, I think, is like artificial versus natural risks, right? So if I do a roulette spin right now and I bet on it, I speculate on it, like that thing doesn't exist outside of this speculative activity. That's purely recreational. Like there's no use to that spin. It wouldn't exist otherwise. Whereas something like Brexit happening or not, or an election happening or not, or even the Super Bowl, that exists in the world independently of, you know, like us taking a position on it. And, you know, the thing that's important is like the line is drawn, like, you know, with two factors, like, you know, what should you be allowed to basically consider a natural risk that should be tradable? Is like one, could people actually like hedge risk, you know, on that event? And I'm assuming you guys understand this is clear for election, right? Like elections impact people economically, first and foremost actually. And then there's a bunch of other stuff. Or something like Brexit or weather or a natural disaster. And it's also super Super Bowl because like I think actually a lot of people have a lot of economic outcomes tied to who's going to win. The city itself actually has a huge amount of economic upside, downside based on who's going to win. And there's a whole ecosystem of people around them that are actually directly impacted. And then the second test is actually, is the forecast in and of itself important? Socially, economically, culturally, and so on. I think the answer is pretty clear for sports in my opinion. Like, yes, the forecasts are important. A lot of people care. And that's a reality that, you know, for better or for worse is true.
Yeah. So when you get those real-time quotes and prices, bids and asks coming in, how do you disseminate the most recent prices and market data from a system side? So I'm a computer science student, and I looked into a little bit of some of the systems that the NYSE and the NASDAQ use, and obviously they have to keep it as low latency as possible, and they have the vendor system and tape and all that. Do you have an equivalent system for making low latency data streams? And do you know about that?
Yeah, so I mean, I think, can get a little bit technical, I don't want to bore everyone, but like, you know, we use Fix, and like, you know, for people that really want to serve lowest latency, you can pull with Fix. Fix is basically a compressed form of API, essentially, that like, you know, compresses data so you can get it faster and like higher throughput. And I think actually the right answer to your question is like, it depends on market structure. So I'm actually not a huge fan of this extremely high frequency type market structures, and I think they just ended up happening because, you know, people kept paying exchanges to kind of get closer and closer to them so that they can get an edge, and then over time, like, people kept doing that until the stable equilibrium ended up being everyone has to pay so much money to be super fast. And but you know, you don't actually need it to be that way. You just have to have it be like fair. You have to have like reasonable set of rules that are like, look, I mean, if you provide this amount of liquidity, you get access to a higher tier of latency and throughput, like you can be a little bit faster than someone else. And as long as you're all equally as fast, if you do it with the same set of conditions, it's actually kind of fine. You don't need to be at, you know, 2 microseconds latency. You can be at like 100 microseconds latency. And as long as everyone is on the same page, it's actually kind of fine. The risk we actually run and we're sort of battling with is actually, live trading is hard. Especially, so we're starting to learn this in sports. I mean, it was hard in the election when things started going crazy at 5 p.m. and, you know, Trump started ripping. But the thing that's hard with sports is like, you could have situations where someone is actually sitting courtside and they could actually just see the outcome faster than anyone else. And that's something we're actually battling, like figuring out how to kind of resolve. We're kind of structuring some set of rules where you can't actually courtside. And you can't actually, it's actually illegal to basically be sitting in a court and like, you know, watching the game unfold before everyone else and a bunch of things like that. And I actually would imagine that the thing will evolve where people will start kind of paying for faster streaming services so they can get to see things faster and set up infrastructure on watching sports or watching different events so that they can get data faster. But that's kind of part of what's cool about it. Like I think that's fine. But from a kind of speed, we don't really prioritize latency as an exchange. We prioritize, like, we basically don't prioritize like how fast an order gets processed, we prioritize how many you pay at a time. Because for market makers, they have to service a lot of customers. Yeah.
Thank you.
Thank you. Speaking of sports, I was just wondering, what was the rationale of entering sports, and how do you think Kalshi is going to be differentiated from DraftKings or FanDuel when Kalshi only offers binary outcomes?
Yeah. So the rationale is like a lot of our customers want it. I think it's that simple. Like it's just the number one kind of most asked thing by customers that we wanted it. So okay, well, now with a more amenable sort of regulatory environment, we could get it done. So the question of differentiation is interesting. Like, I would say there's like two prongs. There's structural, one, there's product. The structural one is, I think, so right now we're kind of the first comprehensive sports offering that's legal in all 50 states. And so DraftKings and FanDuel, I think they have like, I don't know, I think it must be like 26 states right now. But we have access to California, Texas, and a bunch of other states because we're regulated at the federal level. We don't have the state by state thing. The more important thing, and the thing that I'm more excited about, is the product piece, which is essentially, I think sports will inevitably move to a place where it's more of a prediction market sort of structure where people are trading against each other and price discovery happens by you guys, like people. People are placing bid and ask and deciding what the odds are instead of one sportsbook saying, hey, here are the odds and I'm kind of trading against you or betting against you and this is how it works. And the reason I think that's true is because, like, one, if you believe in markets, like markets are more transparent, they're more beautiful, it's like just nicer to have the wisdom of the crowds price things rather than pun intensity. And two, I think the conflict of interest is not there, right? Whereas in sportsbooks, the conflict of, like, the way they make money is through their customers' losses, right? If their customers lose more, then that's a very good year for sportsbooks. If their customers lose less, that's a bad year. Whereas I think for prediction markets, we just take a fee. We don't care if you lose or win. Sure, some people are going to lose, some people are going to win. But our incentives are just very different. We don't actually, we're not incentivized to basically figure out how to kind of like make customers lose more. I'm not saying that sports are doing that, but like the incentive structure I think is more healthy long term. And I believe that I think as long as kind of you're doing the right thing, the long term is just going to converge towards it over time. And so I'm very, very excited about us introducing this. And the early adoption is, I mean, just a kind of a quick number. So we were the 4th biggest in handle for the money line, like the Super Bowl, within 7 days of launch. So like it was FanDuel, then DraftKings, then BetMGM, and then us. And then we were already 7% market share for the money line within 7 days of launch. So I think I'm feeling very good about the sports offering that we have over time.
There's one more question, and that's all.
We can do maybe like 3, I'll do them rapid fire. Yeah, but you should just decide.
Yeah, so I was wondering, basically you guys were able to pretty much like predict the election way better than a lot of pollsters because it was like democratized based on like people betting. So I was just sort of wondering, like, what do you see your role at Kalshi in terms of like just providing data to the public?
I mean, we forecast the future, right? Like, we're not always accurate, but we're more accurate than all the other alternatives. So like, that's a pretty useful thing, right? Like, I mean, we've been saying this for a while, but like, election really slapped people in the face where they realize like, oh shit, like this thing actually works. And people didn't really want it to work because, you know, like the pollsters business is like, you know, kind of threatened by this, and the media is kind of threatened by this because the media can say anything on either side really, and you know, there's no kind of consequence. On prediction markets, you can't lie. Like, you have to be actually truthful and accurate. So right now, it's all open source. People can use our data very freely. We give it to a bunch of governments actually, like the Feds use them for economic like forecasts and a bunch of other things. And I think over time, more and more people will use the data. Maybe down the line we'll charge for it, but for now it's open source, part of the mission.
Yeah, next question, rapid fire. Yeah, just 5 minutes over if that's okay with everyone.
Okay.
Hi, my name's Akash. I'm a senior studying math and CS, going to be trading equity derivatives soon. You were formerly in that role of being a trader, and now at Kalshi seems like you mentioned 3 years fighting legal battles. Like, that's a huge portion of what you spent a lot of your time on. How do you feel about kind of like the shift in that role, going from a trader to the type of things you think about now? Is it equally as engaging? Is there some like leftover-ish to take risk or something? Like, how does it feel going from like a trader to this like new role you're in now?
Yeah, well, that's fast. So I would say 2 things. Like, one, the job, like there was like a mindset shift that I need to do, which is like, as a trader, you need to think about expected value and everything. And I think it's still important to do as an entrepreneur, but a lot of the key unlocks as an entrepreneur, like the things that actually build value, they often require a little, like some sort of irrational leap of faith. Just sort of like, we're gonna figure it out, I don't know how exactly, and we'll see what happens. And that's pretty different from a trader's mindset. Like a trader's mindset is actually just more of a short in nature. They just kind of want to be right. And as an entrepreneur, you really have to figure out how to deprioritize being right. You just want to win. And even if you're wrong, it's fine. And actually a lot of the best entrepreneurs out there, like they're not actually that consistently right. They just win once and win times. The second thing is, as an entrepreneur, people ask a lot about what's the role of a CEO. It really depends per company, but my best definition of it is like actually you're just consistently finding the worst, most dark problem in the company and you're tackling it. And that changes a lot. Like it could be recruiting, it could be product, it could be regulatory, it could be a bunch of different things. And over time, it evolved a lot. And you're constantly reconstructing yourself and kind of learning a bunch of new things so that you can basically fit the role, the new role that it adapts to. So it's really interesting in some ways, pretty tiring in others. All right, do we have time for a last one? Yeah, we should do it.
Yeah, just one more here. Yeah.
And I can stick around after if you guys want to come ask questions.
Hi, I'm Eduardo. I'm a FE student, financial engineering masters. I wanted to ask you actually a couple of questions, but I'll go with the first one. In terms of, I understood the value proposition. How do you make money besides commissions, I guess? And also, I was wondering, I don't really know how the risk management works, like who's taking risk on the bets between the exchange but I guess there is a big component that is like credit worthiness of the exchange. Like, are you able to, settle the bets for people? How do you handle that? How do you think people factor that in? And also respect to a decentralized solution.
Yeah. So I think we make money right now trading fees, and exchange is some of the most profitable businesses when we work. Like you're just taxing money flow into the system, and it works. And the cool thing is, as we gain more and more liquidity, it's interesting. We get more staying power. We actually can increase our fees over time. The risk thing. So right now, or not right now. It's really like a stock market. So if you're buying $100, someone else is selling that $100. So you're basically you put the 100, someone else puts up the 100, and the whole system is it's closed, self-contained basically. So there's no intrinsic credit risk in the system, right? And so that's not where the risk lies today, essentially. And we don't take we have an independent firm that takes some risk on the exchange, but that's not the core exchange and playing business. We're not taking any risk. We're just a matchmaker essentially. We're the marketplace. I think within this year, we're going to introduce what we call leverage and margin in the system, which is basically instead of, if you take $100 of risk, we may allow you to basically put up $10. But that gets really complicated. We have to raise a default fund.
Can you consider short selling?
Right now, buying no is short selling for us. Yeah. It's a pretty close thing. But once we introduce margin, I think things will get more complicated. We have to create a default fund where if someone defaults, how do you kind of close the hole? So we've been working on that for some time. By the end of this year, I think we may have margin in the system. And we have some more tools to get that right. Yeah.
Sweet. And very, very last, super short question.
Yeah.
What we ask every single guest we have here. So a number of us, to put it bluntly, don't know what we're doing. If you were to give advice to your college self, just quick 5-word answer, what would you tell your freshman college self to do?
I still don't really know what I'm doing. Don't worry too much about that. But, I think all these kind of authority figures, maybe the one is don't really kind of trust authority figures. I realize over time, everyone's figuring it out on the fly. So just work hard and try stuff out. And don't be worried about taking risks. You're gonna overthink and optimize your path going forward. Your career is not gonna go the way you think it's gonna go. And actually, if you are very successful, it's gonna go extremely drastically differently from how you think it's gonna go. So just try a bunch of stuff out. Be very, very opportunistic and take some risks.
Awesome. Everyone give a round of applause for that. Thank you so much for coming so early today. Feel free to ask him as many questions as you want. And sweet, 15, 20 minutes. If you're in court, pick up your recorders, yes.